Hello everybody, welcome back to our channel and thanks for tuning in. Why am I not buying physical silver anymore? I started buying physical silver a while ago for different reasons. One of the reasons is the potential that silver has to outperform gold in a bull market, and I'm very sure that when prices of gold goes up, the price of silver goes even higher. I have no doubt that looking ahead, an investment in silver today will be profitable in the future. However, other than investing in the physical metal, there are other ways to invest in silver that I would choose today. I know it might upset some people, but if you watch the video to the end, you will agree with me, I have no doubt about it. Also, keep in mind that my first reason for not buying physical silver anymore is because I'm already comfortable with the amount that I already have. If you are just thinking in physical silver as an investment, you should choose the items with the lowest premium and closest as possible to spot price. But I'm also a collector, and some of my silver coins and bars I have bought because of the design and other factors. For instance, this Silver Britannia bar and the Dragon bar, I paid very high premium, and I paid it anyway because I wanted to have these products in my collection. See the word collection. I live in Europe, and here in Europe there are no taxes to buy physical gold, but there are high taxes on physical silver. Something around 21% in VAT taxes, value added taxes, depending on the country you live. If you buy silver in Italy or Spain, for example, you would pay around 22% in taxes. And this 22% will not be charged only in the price of silver, but also on the price of the shipping and all the costs combined. So if an ounce of silver costs today $26, I would pay first the premium that on silver is in percentage much higher than on gold. So here I would pay approximately 22% in premium and 22% in taxes. So I would pay 44% over spot price to buy this ounce of silver. So clearly it's not worth. Silver would need to go 44% up in price for me to break even. This is not to have profit. 44% up in price just for me to recover the money that I invest in the metal. So it's not doable. This is the main reason why I'm not buying physical silver anymore. So check if taxes apply in your country and see if it's worth for you or not based on your reasons to be buying physical silver. Also, if you're buying physical silver to trade on the silver to gold ratio, you should pay attention on the real ratio considering the premiums and the taxes that you are paying. A little ahead, we will discuss other forms to invest in silver. An extra reason why I'm not buying physical silver anymore is due to storage space. Here, I have 15 ounces of gold. It's worth roughly $27,000. So this is how I storage $27,000 in gold. That's how much space it takes. Half of a mug can store it for me. Now, the same $27,000 invested in silver would be equivalent to 1,030 ounces of silver, or 64 silver bars like this one. So it will need much more space to store. Not to mention, if you move to another country, or if you cross border with less than, let's say, $5,000 in gold, you can simply put few ounces of gold in your wallet, like a credit card, and take a flight. The same amount in silver would take 193 ounces, and it wouldn't fit in your wallet. Probably you wouldn't find space even on your carry-on luggage. So here are other ways to invest in physical silver if you already have a little bit of physical metal. ETFs. ETFs is short for Exchange Traded Fund. Silver ETFs are most appropriated for investors who are looking to gain exposure to silver or engage in speculative trading of silver without actually buying the silver. ETF can be used for a quick trade. For instance, when silver drops 5-6% on a day, it's most likely that it will bounce back on the next day. So playing with ETFs, you could buy and sell quick to make fast profits, or even day trade. This is not an option with the physical metal that you must hold for a longer period of time. There are two popular ETFs to get exposed to silver. Here you will not pay premium, you will not pay storage fees, and you can easily sell on trading platforms, so it's very practical. The most popular ETFs are SLV, which I do not recommend because this ETF is basically managed by the supposed manipulators of gold and silver prices. SLV is managed by the fund Blackrock, and JPMorgan is the custodian. So by investing in SLV, you could potentially be feeding the enemies of gold and silver. Recently, it has been suspected that SLV does not have the silver that they claim to have in their vaults. Other very popular ETF, silver ETF, is, and this is the one I recommend, is PSLV. PSLV is a closed-end fund that lets investors redeem large blocks of shares in exchange for delivery of silver bullion. So unit holders have the ability to redeem their units for physical silver bullion on monthly basis. Obviously, it's subject to certain minimum requirements. The metals, the silver, is in custody of the Royal Canadian Mint, which is a federal crown corporation of the government of Canada and is more trustable than the JPMorgan private banking. There are potential tax advantages because the capital gains rate for the fund is 15% versus 28% collectible rate that applies for most precious metals ETFs, coins, and bars. It's easy to buy and sell. You can purchase at any open day of the New York Stock Exchange or Toronto Stock Exchange. No need investors to handle or protect the physical metal. It's very liquid. There's an average trading volume of $22 million a day, and it can be bought and sold on open trading days, as I said, in the New York Stock Exchange or Toronto Stock Exchange. Now, if the stock market closes, you might not be able to access your wealth or your money or your silver. Just remember, the New York Stock Exchange has been closed for a few days during 9/11 and also closed for a few months during the World War I. So it's quite unlikely that stock markets will close, but it's possible. If you have physical metal in your hand, you are safer in these unlikely events. Other than investing in physical silver and ETFs, silver mining companies are a very popular option among investors. As silver price tends to outperform gold on the upside, silver miners outperform the physical silver as well. In short, silver mining companies can boost your earnings. It's like silver on steroids if the prices goes up. But keep in mind, the same volatility will happen if the price of silver goes down. In this case, silver miners will lose much more than the metal itself. Silver mining companies also pay dividend. The most popular silver mining companies to invest are American Silver, Polymetal, International, and First Majestic. From the three options that I mentioned, I consider American to be the second best option. American Silver is Canada-based primarily silver producer that engage in exploration, development, extraction, processing, refining, and reclamation of mineral properties. The company owns and operates silver mines located in Peru, Mexico, Argentina, and Bolivia, and has several development projects in the United States. Pan American Silver pays 1% in dividend to its shareholders. Now, my favorite silver mining company is Polymetal International. It pays almost 6% in dividend. This is a very good dividend, and this is already a very good reason to invest in this mining company. Here, I can get 60% in dividend just by owning it. So for me, it's a significant advantage in comparison to the 44% loss that I would have in taxes and premium buying the physical metal. Polymetal International is a Russian-based company engaged in exploration in mining of gold and silver and copper. It trades in London, Germany, Russia, and United States stock market. To summarize, I have physical silver for collection purpose and also as insurance in case of economic system collapse. In terms of physical metal, I still prefer owning physical gold over silver as physical silver comes with higher premium and taxes that I don't pay on gold. To speculate in silver prices, silver ETFs and mining companies are also a good options and have their advantages and should be considered, especially the ETFs that shares can be exchanged for physical metal or mining companies that pay high dividend. If you found value on this video, go ahead, click on that like button and subscribe, helping the channel to grow. This will complete the video for today. Thanks for watching, stay safe, protect your wealth, take care.